Hey, good afternoon, all. So again, this one is kind of in following with the mechanical sequence, but I just want to emphasize and highlight some of the things, right? And, for me personally, I'm going to say it again, right? Nothing's really changed in these last 16, 18 months, 24 months nearly. We're in a situation, right, where a lot of you guys are looking at Bitcoin. Perhaps you've never really invested or traded, prior to Bitcoin. I think there's a lot of things that has kind of been sold in terms of not so much a false dream, but maybe just the right dream, wrong time, right? So what I want to do is just kind of emphasize two aspects of this. Now, from a lot of what we've seen and a lot of what I'm seeing, right, I bet the truth of the matter is for, I would say, over 75% of the masses, right, is that they ultimately started buying and up and around this region, right? When you had the likes of Plan B screaming for 135k back in December 2021, right? So let's just assume that, some people have put in $10,000, right? The breakdown of the $10,000 is very likely to be $8,000 when they first had money, right? The price drops down. There was fear involved in buying down low. We break up and above these kind of regions, right? So 45, 50 region, and the next $2,000, which they have spare, is all of a sudden kind of plowed in, right? So even the DCA average is probably still very likely above 60k for 75% of the people, right? Now, obviously, if you read through Twitter and this, that, and the other, everybody bought the bottom down here, everybody sold up the top. Everybody's kind of got diamond hands, yet they've all sold the top again. What you have to look at, right, is the cost of opportunity. And this is not, perma bear view. This is not bullish view. This is a non-biased view, right? I got very, very lucky with Bitcoin. Got in very early, got out at some extreme highs. Very happy with the situation, right? For me, Bitcoin's one of those things that you just kind of track almost out of curiosity these days. When we look at what's happened, right, and the cost of opportunity is what I'm talking about. When we looked at what happened, right, from this high, 2021, we've made a little over 7% gains to the current high. Right? Now, if you look at the highs in 2021 on something like gold as an example, we've gone, 40% above the highs of 2021. This is the cost of opportunity. When I say the cost of opportunity, this is what the larger institutional players will have in the back of their minds, right? They're a team of young analysts. They're a team of, sophisticated investors. These guys have, their MBAs and this, that, and the other. The reality is they will be looking at the return over a longer period of time rather than the short fix, right? Which majority of retail tend to look at, right? So let me give kind of a couple of pointers and a couple of kind of key directions, right? I know anybody who's perma bullish is probably knocked off already. This doesn't kind of agree with their own beliefs, and therefore it's like, oh, well, I don't want this. These are a couple of key pointers, right? You have to look at March 2021, Bitcoin 58k, right? May 2021, 58k. October, 58k. November, 58k. Fast forward 3 years, 24, February 24, right? May 24, October 2024, right? Cost of opportunity, right? Simple as, right? Now, a couple of other things that we've talked about over the last 18 months is clearly the leverage fund situation. Right? We have open interest 29,000. Out of that 29,000, we have over 20,000 in a short position. Right? So the question is always, who's buying at a premium? Well, clearly retail. Right? Who's selling at a premium? Clearly leverage funds. Okay. Now, I've posted this a couple of times. I've shared this a couple of times, right? This is an article talking about the CEO of one of the ETF providers. And the suggestion of this article is that 90% of the ETF inflows are still retail. Right? So again, kind of ask the questions to yourself, right? This isn't, like I said, a bias. This is kind of, I'm asking the question in terms of, give me a positive argument in terms of how you see this evolving to, 350k, a million. I've even heard rumors of 49 million per coin, right? Just think of what the market cap would need to look like in order for these numbers to be realized. Okay. So if we then look at some of the other key points, right, and I've kind of highlighted this just now, this morning in our Discord channel, cost of opportunity, right? Now, when you look at what we've done, what we've been doing, all of these things combined, right, they lead me to ask these couple of questions. Why haven't we hit 100K yet, right? That's the biggest question mark. What is the blocker, right? And again, you guys answer this. What is the blocker in terms of the reason that we have not hit 100K Bitcoin yet, right? We've talked about the ETFs. Now, I've just shown an article in terms of who the buyers of the ETFs are. We had the halving. How much of an impact has the halving had? Right? We've got the price multiplier that everybody seems to scream about as soon as you put any negative Bitcoin comments in, right? And obviously we've got Plan B's stock to flow model, which, in 2021 December, worst case scenario was clearly 135K, worst case, right? And what we dropped down to 15, right? So when you put all of these things together, the real question, right, is not, are we bullish, are we bearish? It's why are we not as bullish as we deem to be yet, right? And then we can come into the mechanical structures, the mechanical setups in terms of what we're trying to identify in terms of the trend and the situation and the setup, right? So all of these things being said, right, I've just covered an awful lot of information, in terms of the logic behind why we haven't, right? I've talked about, certain levels, certain moves. Even the stream I did with Ryan at Uncomplication, we talked about a triple top, right? And the triple top is basically following liquidity, right? So the general idea for, these couple of moves, the ideal situation is that this would have become a larger scale accumulation. Price would have come back into this range for a little bit longer, and then we would have seen some seismic moves, right? We had the fake ETF news, which ultimately priced in a lot of this particular move, right, for when the ETF was actually approved. Okay, so option one, accumulation, bigger scale, we didn't get. Option two was this particular move being a move down A, a move back B for a zigzag pattern, followed by a C back into a similar accumulation zone. And then ultimately we could have gone off to the races for a 1, right? So, for you guys who are not going to watch all the video and just pick out screenshots, right, that would have been optimal in terms of A, B, and a C, right, for something like this. That would have been the ideal situation, option 2, right? That wasn't the best situation. That was the optimal in terms of a pullback move, right? Now, let's kind of jump forward again. And then the third option was this triple top, right? Now, in terms of a triple top, we've clearly come up to this liquidity. We've stayed inside that range for less than a week, right? That doesn't really scream bullish intent. Now, with all that being said, let's come into this mechanical offering. Let's come into this mechanical kind of, continuation in terms of the move. And let's assess this in a slightly different way. Right? We now have our range top. We actually have a move that clearly took us, let's go from this level here, right? That broke the structure, which means we currently have a defined bottom of the range. Right? Now, these are the two levels that are kind of areas of interest. Right? So, are we seeing a pullback for a move up? Question mark, right? Or are we seeing a continuation down for then a move up? Question mark, right? These are the two likely scenarios, right, that most people are currently viewing. These are the things that most people are, assessing and looking at. There are still some kind of crazy assessments with, we're going to go down to 12K. We could go back to nothing. We could go down to $4,000, for example. And there's obviously the crazy calls of we're off, to 350K plus by Christmas, right? So that 350K plus by Christmas, you have to remember it's the same people that are saying, these are the guys that are in this market, right? Retailer buying if they give you a crazy story like 350k, you're more likely to want to use their funds, their tools, their instruments to actually get in, in this move, especially if you're non-technical, right? If you don't know any way in terms of buying Bitcoin, buying through some kind of fund is going to seem like a relatively safe option if up is what you believe, right? So back to the mechanical side. If we think of what we've now gone and done, right? We've created our first low. At this particular point, we've gone and broken a structure, right? And we've come back and we failed to make a new high, right? So we could put a dotted high probably in there, right? Put this dotted, and I'm going to put this as a low, right? Now, clear as day, we've broken the low and created a new low. We failed to make a new high, and yet we've come and made a new low, right? So at the moment, the current situation is this low followed by this high, right? And if we really want to be more specific, we can probably copy this and have something that looks like this, right? This is our current situation on a weekly time frame, right? Now, on a daily time frame, what we've gone and done is we've got a move inside that looks like this, finish. We got a move inside, right, that could look like this, finish, right? We've got a direct move down, which means this could actually be one solid move all the way in there, right? I'm not saying it is, I'm just saying it could be, right? Then obviously as we come on down again, we've got basically another solid move, no pullback, right? Which means this move inside is still technically internal, right? So now we have an internal structure, right? Something like this, if I could spell, right? So let's drop down to a daily time frame. Now, what we're going to see is on a daily time frame, right? We've now got a move down, a move up that failed to take this high. We then come across and break the structure back to the downside, right? Failing to take this low. So what we now have is indecision, right? So what we can do is, given that this was the last extreme low and this was the last extreme high, we can now go in and put new levels at these highs and lows on that smaller time frame, right? So we now have a range that starts to look a little bit like this. Let's put this on something like grey, all right? And then I'm going to put obviously this one, which was the clear move through. Okay. Now what we have from this as a situation is, as we zoom in and as we get closer, we've come straight down, taking out these lows. We then fail to make a new high, again taking out these lows. So at the moment, the momentum is currently down with a small pullback. Right? Now, you can follow this and follow this through. Yesterday's move, right? The whole point of what I even called the video yesterday was follow the money. Right? It doesn't mean you want to be predicting. Now, I said yesterday what I would have liked to have seen is a move up, right? Followed by a move down. My sentiment, my bias hasn't changed, right? If I was trading this on the smaller time frames, which I know a lot of you were looking to do, what I'd be doing is following the money, right? So as we then start to, break up, the main question is going to be, I now have my range on this time frame. Don't do a 4 hour all of a sudden. I've now got my break and a fail. I then break the structure, back down, retest, break, right? I then start to fail. I then come up, break, and I break the structure to the upside. As I break the structure to the upside, come back, retest, up, back down, up, right? And then we fail because we failed this over here. We failed this over there, right? So it's lacking the momentum, right? Now, if obviously we were to look at this in that way, all we've said and all we've done is we've lacked momentum to the upside, which means we can come down, back up, break a structure, right? Back down, back up, break a structure, right? Which means the trend is currently down. Okay. Now, the trend being down, we can draw more lines if you want, again, being more aggressive. The trend is down until we break this level. We now have a low stuck in, right? And I'm stepping down and stepping down and stepping down until I'm waiting or looking for an entry that suits what I'm looking for, right? So if I was to have taken yesterday's move long, which was probably around here when I did the video, there's no reason for a pullback yet. There's no change in character, and there's no move that breaks the character. Okay, so one way or the other, if you were taking this on smaller time frames, you could still be running this trade until that change of character, right? Until that trend actually shifts in the opposing direction. So mapping it out, mapping it out, mapping it out. I've talked about the bigger picture. I go back and I stick to what I've said, 18 months ago. No change for me. Triple top, right? We've kind of done what we said. 3 options, worst of the 3 options playing itself out. Right now, momentum, bigger time frame is currently looking bearish. I'm not seeing any kind of white swan event coming to save the day. We've had the halving, we've had the ETF launches, we've had the price multiplier kind of over and over and over again, and yet we've got retail buy-in, leverage fund selling, and it just kind of puts all the kind of the pieces of the puzzle together for you, right? So again, part of the reason I've called this one kind of plain sailing is make it easy on yourself, guys, right? So anyway, enjoy the rest of the weekend. Hope you enjoyed this one, and I will see you on the next stream. Thanks, guys.